Good evening, ladies and gentlemen. Blair Nightingale here. It is time for Market Mondays. June 26th. Can you believe it? June 26th. We're well over halfway through 2023 already. That actually blows my mind. We've been right here all year long for Market Monday. I'm pulling up a chart so you guys can see this in the background because we are going to do a market update today. I will bring that back up in just a little bit of time. You know, one thing I used to do every single time, maybe that's why I stopped doing it every single time, because I was doing it every single time, is just to remind you guys, we got Facebook friends, we got YouTube friends who are joining us on here tonight. We're so glad to have you guys. It's such an honor and a privilege to be here with you guys. If you want to chime in, comment, question, anything, you can go ahead, pop it right in the comment box. It's right here on my screen, wherever it is on your screen where you're joining us tonight. You can put it right there in the comments. Just say hi. Let me know where you're from. If you a first-time listener, somebody sent this to you. I usually end the broadcast by saying, hey, if somebody out there that you know hasn't seen this Market Monday, but would like to get connected, then you can go ahead and send this over to them. Maybe that is you. My name is Blair Nightingale. I'm one of the coaches here at Tradeway. I took my very first stock trading class in 2015, knowing absolutely zero, absolutely nothing. People usually ask me twice, really, Blair? You really didn't know anything? And the answer is no, I really didn't know anything about the markets. I really didn't know anything about stock trading. And it is a learnable skill set. It's never guessing, gambling, or just going for it. Yes, you can open a brokerage account and you can guess and you can gamble and you can go for it. And some of you guys are here tonight because that's exactly what you've been doing. And you know that doesn't work. You can win a trade. Listen, anybody can make money on a single trade, right? That can happen. But what happens over time, right? Our goal is consistency. There is a skill set that we must learn. Mercy is on with us tonight. First-time listener, 1 week with Tradeway. So brand new. Doesn't that sound kind of old school, like the old school radio shows, right? Like first-time caller, long-time listener. Awesome. So glad to have you on here. Mercy Benjamin is also with us. Benjamin's been with us for a while. He is in Arlington, right here in Dallas, Texas. Glad to have you on here with us. Tonight, we're going to look at a market update. Okay, we've been doing lots of market updates. There's been lots of shifting and changing in our economy. Things are always shifting to a degree. They're always changing to a degree. There's always stories. However, certainly right now, things have been, let's just say, active, right? There's a lot of question marks around the economy and the markets. So I'm going to pull up the markets here in just a minute after we're finished saying hello to all these beautiful people on here. Wally says, hey, Blair, checking in, Vail, Colorado. Been off and on, right? Been in and out, right? Life's happening. Hoping to get more grounded and consistent with the Tradeway team. Cheers. And cheers to you too. That's exactly it. See, that's what I'm saying. It's about consistency. It's about consistency. There is no magic number with consistency, because what exactly is consistent? But I can tell you this. This is something I say in our live events all the time. If I go out and I'm going to make $8 on a trade, okay, $8, but I'm going to lose $2 if I stop out of the trade. If I win, I make $8, but if I lose, I only lose $2. What I'm introducing to you is risk return. Now that's 4-to-1 risk return. For every $2 of for every $2 of gain, right? I'm going to go 4-to-1, right? So that means that I can actually set up trades like that where over time I can lose a lot and still get out ahead. So if I have a $2 stop out, and I stop out once, how much money did I lose? I lost $2. Now I wanted to make 8. And let's say I didn't. Stock didn't do what I was hoping it would do. And it went down. Okay, well, I lost 2. Let's say I take the second trade, same setup, and I lose 2 again. What have I lost in total now? out of those 2 trades. $4. Let's say I'm only trading 1 share at a time. I'm practicing, and I do another one, and I lose on that one as well. We like to say that's an expense. Businesses take expenses. That's the cost of doing business. Well, taking expenses in trading is part of the cost of doing business. But we've defined the expense before we take it, $2. So we take a third one. That's $6 now. We do another trade, and we lose another $2. Now you say, Blair, that's 4 trades in a row. This blew my mind when I first learned this. Because people really still think, well, isn't it mostly gambling? Isn't it mostly guessing? And the reason that argument can be compelling is because we can't know what the market is actually going to do. I can teach you a skill set, but that skill set doesn't tell you what the market's going to do, right? It doesn't tell you the future. It tells you what you will do when you don't know what the market will do. So now we've taken 4 stop outs in a row, and we've lost $2, $4, $6, $8. It's $8 after 4 trades. Now, what was $2 we were risking to make how much? 8. 2 to make 8. That's 4 to 1. That's not bad. We don't find 4 to 1 all the time. Okay, but it is possible. So I've lost 8 now, and then I won 1 trade. It's this guy right here. I won a single trade and made $8. How many out of 5 did I lose? 1, 2, 3, 4 trades, right? Only 1 trade did I make money on, and I made 8. Okay, so 80% I can lose, and I come out breaking even. 1, 2, 3, 4 out of 5. 80% of the time I lost, I won 20%, and I broke even. See, that's not guessing, gambling. And not only am I going to do that, but I'm going to set up those 5 trades in an environment that's much more likely. Is it guaranteed? Nope, not guaranteed, but much more likely to do what I want it to do than it not doing what I want it to do, which adds another layer. But we have to learn how to do that. We have to learn how to do that. So I'm going to flip the market update a little bit today, pull this guy up, because I was going to show you the markets, the indexes as a whole, and give you an update on those to start. But I'm going to start us on here. Why? Because what I'm talking about is being able to understand that trading is a system, right? Trading consistently requires a system. Trading consistently requires a system. And what we've started to see, well, let's zoom into this right here. Right? What we have here is what we call an uptrend, a very consistent uptrend on General Electric. Since, let's go to the bottom here, we can see the date. The date since the beginning of March, this has been moving into the floor, up to the ceiling, into the floor, ceiling, floor, ceiling, floor, ceiling. Even that was real quick. 2 days, right? Floor, ceiling, floor, ceiling. And then it started going sideways. What happened there? Floor, check this out. We did in our program, we did just a paper position on this. And what happens when it bounces at the floor? Okay, that can be an entry signal for us. Bouncing at the floor, not learning all this hyper technical jargon. We're coming in here and we're using what we call a technical pattern to make buying and selling decisions. The next day, what happened? it goes all the way to resistance. Now, I did not move this resistance line for this particular day here, right? It moved up, hit the resistance because it's the one it's been using, okay? And then moved back down. We would have had to be Johnny on the spot there to sell that, right? Which we can do. We can have automatic sell orders or alarms on our, our iPhones and things like that, which is typically what I use as an alarm on the phone to alert me what stocks are doing instead of using what we call a hard stop or a hard sell order. And then it actually breaks support, bringing us to today, where now we've got a little bit more of this kind of a thing going on. Okay, where we're starting to see that little bit of downward movement getting below support, which might set us up for some downward trades in the future if this thing does what we call a kiss goodbye. But the point here is you have a system that makes sense of what you are supposed to do. It is detached from ever needing to know what the market is going to do tomorrow. So when we come on here and we do market updates, some of you guys, like you said, your first time here, you've been to one of our live events though. So you're learning, okay, I'm just starting to get it, or maybe you're a little further along. You've been around for a while, you've been trading for a while, and then you really get it. It's never about knowing what the future is in the stock market. It's about knowing what you're going to do and being able to manage yourself to do that, right? I was unpacking a box of books yesterday, and I found an old one from a gentleman named Brian Clemmer. They do like personal development seminars all over the country. I've personally never attended it. I've had some friends who do it, who have done it, I should say. But the point is the book was recommended to me by a CFO, and he said it's one of the best little books he's ever read. It's called If How-Tos Were Enough, We'd All Be Skinny, Rich, and Happy, right? If how-tos were enough. And all it means is whatever your desire is, right? If there was, if just a here's what to do was enough, then we'd all have the things that we want to have, right? Assuming that maybe the only barrier is that we didn't know what to do. Now, some of you guys come in and you go, well, okay, trading, I didn't know I could just look for a pattern. I didn't know I could just open a brokerage account on my computer and I could actually trade my money right there. You didn't know that. So in that sense, I was in that boat, in that position, ignorance, right? That's what it is. We didn't know what we didn't know. That was the barrier. But once we learn to know, you find that the real job of the trader is to know, but then manage themselves according to what they know. Okay. So that's a very important part of what we have to do. Aiden says, I literally caught that trade with my first call. Now, Aiden, are we talking about the one I mentioned right here, the paper trade backup? That's not a half bad one to catch right there. At 2-day trades, I showed you 2 separate spots on that pattern that had 2-day movements up to resistance. Yeah. Okay. Aiden says yes. So, stocks don't always move from support to resistance in 2 days. But GE has a considerable amount. It's made nice moves in a 2-day period at multiple points in that particular pattern. And then the pattern breaks. It breaks and it changes. And we go, okay, time to move on and look for something else, which then brings me to the indexes. We want to do an update here. This is Market Monday. We ought to update the market, but I wanted to give you an update and a refresher and a foundation on how it is that we even navigate the markets. We don't come on here just claiming to be a bunch of gurus who understand everything that the stock market will do tomorrow. No, we're just regular folks who've learned a skill set because we got into a community that understood the skills, that was getting breakthrough in those skills, and they were imparted to us. in an environment of prayer and safety and practice. That is what happened. And that is why we come on here and go, hey, let's reason together. Let's look at the market and help you see that there is an applicable, there is a learnable skill to stock trading here. And that is what we're doing here. Okay. Now, you can see that we've got multiple patterns. Look at this: floor, ceiling, floor, ceiling, floor, ceiling, floor, ceiling. Then it doesn't come all the way back down, does it? Comes down a bit, hits this red line that's drawn on the screen, breaks out, moves over to the red line, up again, comes back down to the red line. Now I'm going to zoom in here so we can see what's going on. Back down to the red line, and then it breaks. So for a while, we had this little line on here because we were starting to see a pattern. It came up into here, up into there, up, back down to this guy right here, and then it actually started to flatten out. These indexes have just been running really hot, particularly this guy right here. Okay, this is another example, right? It was just getting hot, hot, hot. Even though the S&P 500, which is the more broad-based index, 11 sectors of the U.S. economy, it's I lost my train of thought on it. At the S&P 500 gives us a picture all across the economy, whereas the NASDAQ is a lot more contained to technology stocks. Not 100% only technology, but much more so it's technology centered. So what we find here is that these stocks that got really crushed last year have really been outperforming even the S&P 500 this year. And that is something that we have been watching because it's been very, very bullish, right? It's been very, very bullish. There's been lots of great opportunities for the bullish side of things over the last 3 months, particularly here in the NASDAQ. Finally, though, having reached for the sky, getting up to about 15,275, it's making a pullback. This isn't a particularly large pullback. It's breaking that pattern, but when you see a stock or an index just really riding this red one, this 10-day moving average, that's not a very deep pullback. A pullback to the 10-day moving average, it's not very far, right? So the fact that we're even just getting down to this white line here, which is the 20-day moving average, this is still not very far, but we're going to watch and see if it can hit that line and hold moving over to the S&P 500. Same thing. Got this nice steep line here, but it's broken, tried to bounce at the 10, and then overnight you can see it gap down. Okay, that was Friday. It gapped down and then moved below the averages today. The NASDAQ really started to sell off later in the day, and that pulled down the S&P 500 as well, which takes me back to what I was saying here. When you look at this guy, you can start to see, what did it do? It breaks through support, finds its way back up to support. Because let me get rid of this line. What did that do? Right? It came into the support line and then started to fall. So if this can fail below the open price here, it may set itself up for a drop down into the 50-day. Blair, do you know for sure that it's going to move into the 50-day? No, I don't know for sure. What I can do is establish a pattern. Then I can establish support and resistance, risk return, apply my skills and go, is this an opportunity or is this a distraction? That's what I want to look at. Okay. Yeah. And you know, Aiden, I don't blame you. I'll go into that a little bit more deeply on our coaching side, which, by the way, guys, we have students. I just mentioned, if how-tos were enough, we'd all be skinny, rich, and happy. We have an entire side of our program where coaches and students have the ability to meet with one another. And this is something that gives us the insight we need to really be able to apply the skills. Remember, there's knowledge, and knowledge is important. They say knowledge, they don't say. The scripture says knowledge is better than gold, right? But remember, wisdom is knowledge applied correctly. Wisdom is knowledge applied correctly, and we want to be able to apply that wisdom correctly. So some feedback on what happened there, and what I would say would be important to know for next time, Aiden, is something we can discuss on the coaching side. However, Aiden makes a great point. This is a good example. Having one win and taking a stop out and still being well in the positive. So that's really, really important. And I'm glad that we have somebody on tonight who can highlight that for us, because it really is an important part of the skill set. Normally we spend some time going into the news side of things. And really, the news is a little more quiet right now. There's a little bit of talk out there that, Wall Street's a little bit nervous about rebellion in Ukraine, or in Russia, I should say. Nah, I'm not really convinced. I'm not really convinced that Wall Street really cares all that much about that right now. There's no doubt there's global instability. There's no doubt that we could see the war in Ukraine escalate in ways that could impact the market significantly, but I think it would need to escalate in and of itself significantly for that to really occur. Of course, that could happen. So I keep it on the peripheral, but I don't really consider that to be much of a driving factor right now. Of course, the Fed has been the big news story. That's a little more calm right now. Earnings a little bit more calm right now. So there's not a ton of that on deck really driving market news. But we will see some data coming forth here in the rest of the week and into the rest of closing out June here. So we'll be watching for that. But what's on deck right now, not so much news driven. This is going to be more technically driven. And really what happened is, as you go in, I'll switch finally back to the NASDAQ. When you finally see not a lot to drive it up any further, some profit taking, some sell-off happening, and that actually causing the indexes to take a little bit of a break right now. So I mentioned to my wife, who is learning to stock trade herself, okay? My new wife, I should say, she's learning to stock trade. We've only been married a month, so she hasn't been around a lot of what I've been doing that long, and it's been really, really fun to show her exactly what I've been saying to you tonight. It's a learnable skill. And I told her what I'm going to tell you. Don't try to catch a falling knife. That's the old saying that the traders, the old timers had. Don't try to catch a falling knife. And what that means is when a stock is falling, let it fall. Let it stop. And then when it stops, reach down and pick it up, so to speak, right? You try to catch the falling knife, what's going to happen? Well, the likelihood is you're going to cut yourself. So just take a step back, let it hit the floor, and then you can pick it up. That's what we try to do with stocks, okay? We try to do with stocks. There was, oh my goodness, guys, I got to remember the ticker on this now. Oh yeah, right here. Here's one I was stalking today. Ha, pun intended. Look at that. Look at that, right at the 50-day moving average. But what was it this morning? It's got that nice big wick on there. That means it was not, I'm going to adjust this a little bit. That means it was not green earlier in the day. Right there. And then we'll take this, put it right on that 50-day. Okay. So you got a hit here, way up. Bounce at the 50, up. Now, this gap down to the 50 there a little bit, right? And then you had earnings. Boom, back up, hits the 50 today. Okay, the options on this were terrible. Options were terrible on this stock. Doesn't have enough volume, doesn't have the liquidity. But nice move into the 50-day. This morning, I literally said, this is why I'm sharing this with you now. Don't try to catch a falling knife. Let it hit the floor, then pick it up. What happened? It hit the floor, it stopped, then it picked up, turned around, and went the other way. And that would have been not such a half bad start to this trade right there. Okay. I'm not in an active position on Dole, full disclosure. I'm not. Okay. This is the one I was watching this morning. So that's a very good lesson. Lots of nuggets in there if you're paying attention. Guys, thank you so much. This is a quick and easy Market Monday. We're back next Monday. We're starting a new series, so you'll want to be here. Make sure you send this over to a friend if you know, hey, they need to see this too. I can open a brokerage account and start an at-home online stock trading business from my home, but I need to learn to do what I need to learn to do so that I can be consistent. We talked about consistent, right? Lots of people open up brokerage accounts, but that doesn't make it a business, right? We've got to learn to be consistent. And that means we've got to get a skill set. We've got to get into community. We've got to get into mentorship. And that is what we do here at Tradeway. If you have never taken, you're joining us tonight, and you've never taken a Tradeway course, you can head right to tradeway.com/events. I'm going to post it for you in the chat here for our friends on Facebook and YouTube. And you can join us if you're in the Dallas area. Actually, you'll be able to join us live. You'll see that right there on the events page. But we also have our step one, start your journey. If you're just starting, we've got your step one, start your journey course coming online. You can join that with your friends, with your family, and you can learn exactly how to apply this for the foundation of our system and everything else that we do from there. And that is an awesome place for you to start. Everybody, thank you so much, Facebook friends, YouTube friends, for being on here. Make sure you like and subscribe. We will not bombard you. However, we will give you updates to our programming because we're doing awesome programming right here on Go Tradeway TV every day of the week. And you don't want to miss any of that. Guys, thanks so much for being on here, and we will see you next week. Good night.